All right, guys, welcome back for another video. In this video, I just wanted to cover solely price action and break down the current swing in a little bit more detail than I did in the previous video. And again, just focus on price action alone without incorporating any indicators. And I think, I had mentioned previously the weekly high. It's right there, the July 17th before the run up. You can see that by going to the weekly chart on Coinbase, not the previous weekly high, but this last relevant weekly trading range right there. And if we go down to the daily, you can see why that's important because really you have this liquidity run above here. And, if this high here were to have been a a swing high, it would have been surrounded by two lower highs. So ultimately, if this consolidation would have broken down, you probably would have got your lower high formed right here, right? So price kind of made a decision here, right? Rather than creating this as a swing high surrounded by these two lower highs right here and right here. It didn't break down. It actually broke up and ran liquidity above these highs. That's why this low is very significant. And I would look at this as a swing within a swing. So we can mark off that level right there. Of course, there's the greater swing right here. But again, just, going level by level. So, you have this levels from this previous high right there. We can move that off the chart. Again, this is the weekly high right there, but you can, represent this as the bodies of the candles right there. So maybe, let's see, go in here and put a rectangle in like this, something like that. Move this off. You can see how this is an area of interest, right? We'll go back to the weekly chart. Again, not very distinct right there, but if we go to the hourly, it's very clear liquid range right there on the intermediate time frames. And again, we have this smaller swing within this larger swing right here in this liquid zone right here. So typically, we would be looking for a response off the liquid zone, and we've actually seen it. So price comes down, tests that weekly high, and then you see volume step in right here, marked by the volume on Coinbase. Again, Coinbase is a spot exchange primarily, with a considerable amount of spot volume driven by spot investor volume. That's why I like to use it for volume profiles. And you can see volume moving up very aggressively off that level. Again, it's not telling you that this is like the be all end all and, go 100x long here, but it is telling you that, okay, there are buyers stepping in at this level and they're pushing price above and starting to run liquidity to the upside. Now, a lot of times at these levels, you'll get, again, remember this is a weekly high we're looking at. So a lot of times you will get this this type of volatility expansion around a weekly level as price takes out both traders on both sides of the range. Illustrate that here. If you contextualize this range just very quickly with a horizontal line right there and a horizontal line right there. So price comes, it's in this very narrow range, and then it runs down to the weekly level, then runs up above these highs. People have stop losses there, and then it runs back. Right, that's a expansion of volatility or a whipsaw behavior. Typically, what you see when you're zeroed in on the lower time frames and the weekly time frames are playing out. Again, it's not an end-all be-all, but this is the type of signature that you generally see at some type of support. Now, just going back to the larger swing, so now if we mark off on our chart where exactly this area started breaking down, well, we have this area right here. Let's mark this off right there. Move this roughly. We'll just real quick, just for the sake of being thorough, we'll go right here and put that down there. So this is a good way to illustrate it. So, you have price running above a prior weekly high, and then kind of getting into this narrowing range, and then expands upward above this high right here. Then you get a test back down into the high, and then a distribution pattern. Again, sometimes it's only a distribution pattern in hindsight, but I bet if we went down to the RSI, yeah, you would see this bearish divergence forming. But it's not really, it doesn't break down until you start breaking these lows right here. So price comes down, tests off that level, you get a little bit of a bounce. And then when you break that level right there, that's where, you get your break of small time frame structure. And that's when, the higher time frame or things start to break down a little bit. And you can see here, price kind of runs up into a bearish 618 right up there. Let's see if we can mark that off real quick with an arc. Let's see. Yeah, so you run up into a bearish 618. There's your ideal entry, again, after the break of structure. And then you get this low time frame downtrend, right? You run, here's your area where volatility contract within this consolidation, right? You see this expansion, then it contracts, pushes up. There's your point of origin. Price runs down off the bearish 618 into this point of origin, runs up just above these highs right here, grabs liquidity, runs back for the lows. And this whole time we're kind of oscillating around, but we haven't tested the weekly high until we get down there right now. And of course, we're testing that level right now. And that would be the weekly swing, or, well, this small time frame swing. And of course, we have a larger swing within a smaller swing. So again, if price loses this weekly level, I think it's reasonable to expect price to make a run for these lows right here, marked by the bottom of this swing. And again, the reason why this low is important is because, again, we marked off the weekly high right here, right? And we talked about the importance of how this would have been a swing high had this become a lower high relative to this high. And the low here, put in the volume came in. Well, not that much volume, but it did break above the average. But really, the importance is that it ran above the liquidity, came down based off that level, ran up. So now the important part to keep in mind is that the low here that created the move into the liquidity, that's a low you want to pay attention to. And that's the low that forms your swing, right? So, now we trade into this bearish 618 after breaking structure. And now we're, trading to the bottom side of this premium. A lot of times the 618 is not going to act in a perfect way. A lot of times you'll actually see this type of behavior, right? Where price will run up, it'll run down into the 618 and then run up and then sweep the lows of the 618 and then run up. That's a very typical characteristic, going down to maybe a 786 retracement, which would probably be around the weekly high if you put that in. So let's go right here. We can put the 786. Yeah, you can see 786 is coming in right at this weekly high. So if we put a let's see if we put a 382. Yeah, so again, this is a classic Fibonacci characteristic, right? Whenever you have a swing, price will, almost no matter what direction the swing ultimately breaks in, a lot of times you'll get a rundown into the 618 and then a sell up into the 382. So it's just gyrations within these low time frame swings, and of course let's pull this off the chart real quick. So if we lose this level, then it's reasonable to expect price to make a run from, say, 21,400 down to 20,800 roughly, and run the lows below the swing. You definitely have a good deal of liquidity down there, and then at that point, now the larger swing gets initiated, and then so this is a little bit of the fractal nature of price action. So again, here you can see how the 618 retracement from this swing here was the 382 on the larger swing, and that 618 is coming in there. Again, you may see a little bit of a bounce there, but ultimately, and remember the golden pocket of a 618 retracement is not exactly all the 618 is really telling you is that price is at premium there, right? It's beyond the median of the swing. So once the price gets beyond the 618 retracement, it's going to within premium. And the deeper it gets within premium, obviously, the more advantageous the trade is going to be. And, typically, once you get into the premium of a swing, you get some type of reaction, some type of tradable reaction, for at the very least a scalp. So, you know, uh, but again, you got to play level by level. Um, you know, if you are in a short position, then I would be looking to take profit down here. Let's see what this looks like on a daily chart. Yeah, so we've got our kind of where things started breaking down right up here and running down into this weekly high. I don't think the 618 is very beneficial in this case. I think it's just much clearer if we just observe things from this perspective, right? This was your ideal sell right there. Here's your weekly high. It's also lining up confluent with the bodies of this high right here. So you got your weekly. If we go back to the weekly, there's your weekly high coming along these bodies. We're started breaking structure up here, came down at this level. My opinion is that if we break down from that level, then we'll go visit these lows right here. And again, that represents a stop run, right? Maybe we could mark that off as put the rectangle back on the chart real quick. Yeah, you can say with reasonable certainty that there are going to be some stop losses down there, and price would move from this liquid range, right? For the same reasons that we identified this as an important low, right? Running above this weekly high, this area. If this level's lost, then price probably trades down into this area and then puts in, something of a bounce from that area. Again, this is getting a little bit ahead of myself, but, maybe a retrace up into this area that we were looking at previously, right? Support, turn, resistance. But, at a certain point, if this level is lost down here, if you don't see price kind of stabilize in this liquid region and mount a rally off there, then you are sort of in a sell side mode where price will probably run for liquidity below these lows right here. And that would not be the area either to be putting in a short position, right? That those would be a lot of stop loss orders for long positions. So that would be an area to take profit on a short, or even buy a spot position. Again, I think the volatility expansion to the downside is over, right? I think this is the stage of the market where this is an extremely aggressive move, uh, on the back of blow up of Lunaterra first, tightening liquidity from the Fed. You have all these major funds, Three Arrow Capitals blow up. It's just the amount of destruction that has happened in the last few months is pretty extraordinary, and it's reflected in the price chart. So you see extreme volatility, and I think it sort of primed the market to expect that type of volatility, even downside volatility. And I just don't think that's what we'll see. I think the market has based out, and we may see the market grind lower for for downside liquidity if ultimately price can't mount a rally. But I don't think we'll see the floor drop out and a major capitulation candle. That's what everybody's afraid of. So typically, that's probably not what they're gonna, probably not what the market's going to give them. Especially if you see price drop down right around here. I'm sure the fear and the PTSD from this movement up here would really get people expecting that quote unquote final capitulation. But again, whenever the most of the market is expecting a certain outcome, I think it's pretty unlikely I think the market has sort of cooled down a little bit here, at least to the downside. And if it is running the downside, it'll probably be a real chopping process that plays out for a period of weeks or months. Again, that's under the scenario that there's just not enough liquidity to mount a rally to the upside. You can see that scenario. And as for the bullish scenario, I still remain relatively bullish until this weekly high is lost. I think this break of structure here that we identified, breaking here and running up into a 618. I think that is just a low time frame structure, and I think we've seen it run into this high time frame area right here, and seen a reaction off that area. If price can hold this area, in the next few days, I know we've got the FOMC coming up, but if price can hold this level, going into the FOMC or reclaim it after the FOMC into the weekly close, that I think that's relatively bullish, and I would be looking for higher prices, assuming we get a weekly close above that level. Then I would be looking for this gap to fill above, so new highs on Bitcoin, and then reaching up to this level up here, your 28,000, 30,000. Again, but that's a few days away, a few weeks away, so trading, as they say, goes level by level. Don't get too far ahead of yourself. But yeah, I hope you guys like this content. If you guys do like this content, just give the video a like, subscribe to the channel, and I'll catch you guys in the next upload.